I'll put the an oscillating fan, but I want you guys to tell me if the sound is high, is it making a sound. Do you hear the sound? This like a whoosh sound, or it's okay? So anyway, lovely. Hi, Bill. How are you? I think we had an excellent trading week. There has been a lot of events that took place last week. Some of it was the Bank of Canada has raised the interest rate, and as a result of that, the Canadian dollar sold off more than 2% in one day. And this takes us back to our trading style, is that we do not take the event per se by itself. We actually look and identify and see the reaction of the market to it, and we trade based on that. So to start with, we're going to do what we do every week. I did not do the Barry, if you have no sound, then it's at your end. I mean, everybody's listening. You can hear me over here. I didn't do the spreadsheet this week because, as I said, I'm using a different computer, but this is the workspace, the radar screen, and as you can see, for example, if I do a quick tally, you'd see that we were buying the dollar yen from 91.27. It is now 91.80, so we're up on that about 60 pips. This one is 104, 106.20, looking at a couple of hundred pips. The Swiss franc also another 100 pips. And you see also the Australian dollar has sold off tremendously, giving us at least a couple of hundred pips on every pair. And the Aussie CAD, we have about 500 pips on that trade. So as a trading week, it has been a brilliant trading week, and we have been consistently now on a weekly base actually making an average of 1,000 to 2,000 pips on most of the trades that we take. So anyway, let's start now by doing our weekly analysis, and we do that by looking at the currency indexes first, so that we try to identify the strongest currency pairs, and we try also to identify the weakest pairs. And the idea is to buy or to go long the strongest of the strong, and to go short or sell the weakest of the weak. So the first one we're going to look at is the US dollar, and as you can all see, this is now a picture perfect chart for an instrument that is now beginning a bull leg, i.e. now that we have pretty much been in a confirmed bull run in the dollar, and we should be looking for a further continuation to the upside. We started buying the dollar from 76.04. We began to add at 76.98, 79.04, and so on. And you can see what happened last week. We had about a couple of hundred pip range for the week, and we closed at 88.31, and the high of the week was 88.45 or 40. So this is a pretty good close, and should indicate that now we are going to continue to a much higher prices. As far, I mean, we're looking for continued strength in the dollar, and this move that I want you to see this move from the 81.12 all the way up to where it's at now. there is nothing in all the currencies. I want you to take a mental picture of this. There is nothing in all the currencies that we are going to see right now that even resembles this or even close to this, i.e. you will see that the dollar is now the strongest of all the pairs. And the next structural point that we should test is the 91.27. The 91.27 is pretty interesting because I want you, if you look at this, this is now, the 91.27 is based on our technical work, becomes now a new structural point, and it is a trend change point also. It's a structural point and a trend change point also on a larger magnitude of a trend, or on a larger trend size. I mean, trends come in many sizes. If it gets above the 91.27, we are going to start a trend of a higher magnitude. And you would see that possibly on the monthly chart. So if we do come above the 91.27, that means that now we are in a bona fide bull market, if you will, versus in the dollar versus all the currencies. And this is going to be the price point that we have to look at for the dollar, first to test, two, if it's going to break above it, and if it does, then that's it. That's all what you want to be. You want to be long the US dollar. Okay, that is the dollar. And if you also want to look at the daily chart for the dollar, you can see that after this congestion we had the break to the upside. And so again, that's the dollar. Looks extremely strong. Let me go back to the weekly. The second pair that was strong from last week was the Japanese yen, and it was strong because we had the there is the unwinding of the carry trade, but we have been trading below. We said last week that if we do trade below the 1.0999, that will be the beginning of a selling point in the yen. And we can see now that the yen is also beginning to sell off. And as some of you might have known, there either has already been or will be a new prime minister that will be elected in Japan, and he is more inclined, or favors, if you will, a weaker Japanese yen, because he firmly believes that a strong yen would hurt the Japanese economy and the Japanese export. So that election of a new prime minister in Japan would indicate the probability that we might see now further continuation of weakness in the Japanese yen. As long as the yen is above the 106, we are still, all what we have now, we are still in a congestion. So there is a slight weakness in the yen. It is not yet that negative. We're going to take now the second currency that came up, was strong last week, and it came up with the news, which is the raising of the interest rate in the in Canada. The Bank of Canada raised the interest rate, and as a result of raising the interest rate, you'd see that the Canadian dollar sold off about 2%. And this was what happened on Friday. That was a major sell-off. You had about 250 pip move in the in the Canadian index as a whole, and this is the Canadian versus all the other currencies. So the Canadian is extremely weak because now it doesn't have, it was being supported by the news that's coming out that they're probably going to be raising interest rate once the news came out. So it's now we're looking for a further decline. The Australian also is absolutely, David, absolutely. And this is how we trade the news, David, when we took the course. Good news, bad action. So that's a typical discounting mechanism. The market has already discounted this news before the news comes out, and once the news came out, there is no reason for now to stop buying the Canadian. Also, the Australian dollar, as you can see over here, has also been extremely weak, and it has sold off. We have identified we selling the Aussie as of 92.12, and it has been pushing down. It came down to the 80.49, and this is a very interesting price point, guys. As you see, it is the high, or pretty much the high of July 2007. It was also the September 2008, and it was the low of May 28th of this year. So it is a structural point that has been tested for the last 3 times, and for the last 3 times we had a well-defined behavior upon the break. You can see here that when it broke here, it got us about 69, so about 1,000 pips. This time when it broke, it gave us close to 2,000 pips. So here is where we are. This is the moment of test. If we do break below the 80.49, we should be looking at a minimum at 1,000 for something to take us back towards the 69 level. So you're looking at